Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook on our big six for the futures markets. This is where we put together a plan of attack for trading the next day. In this case, that would be tomorrow and the first of the month. The final day of the month is beyond us now. Only a few hours left, and we'll be past all of the February's price action. So very interesting day today. Keep in mind one big thing to sort of keep in the back of your mind is simply that, well, we've got President Trump still on the microphone, set to be on the microphone later tonight at 2100 Eastern time. So if you are an overnight trader or an afternoon session trader, please be careful because things might get a little bit crazy when he hits the microphone. Now, before we jump on into the charts here, don't forget, swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That will add you to our email registry, so we'll send you an email every single time one of these comes out, so you never miss a beat, and you'll always be on top of the markets. Along with that, we talk about different statistics, different things to keep in mind, different stocks to keep eyes on, etc. On occasion in that as well. Along with that, at the bottom of the webpage, we have our blog posts, and every single morning we post a blog on here that goes over our daily market levels, a market recap going over the psychology of a specific market, all kinds of fun stuff at the bottom there that you can check out as well. Now, looking at the markets today, we have the Bund relatively sideways, a little bit of a range. We had a small gap up in the morning session from yesterday's close. They tried getting a run higher and immediately then after closed the gap. The buyers just seemed to kind of gave up. Now, on that big move down, all they managed to do was kind of deviate the move up, and they deviated it down, went through it a little bit, but eventually did find support when they came back up in. You can see right back higher. So what does that leave us with? That leaves us with a range. We are buying low and selling high and trying to stay out of the middle. Now, recency is a big key when you're looking at ranges. We just cycled off of the highs, so we need to be a little bit more on the side of bears because we're more likely to have a continuation move down to the top of that range low, 165.79. But one thing to keep in mind is that this is kind of a blow-off move, right? They sort of finalize everything and then everybody gives up. That's a sign of exhaustion. And when that happens, usually the high and low of that candle can be an area of interest, but more so what they do afterward. Notice where they turned around here, they tried again, they tried again. It's pretty obvious that there's a level of support inside here, and that may end up being the bottom of the range. Now, the bottom of the range projection that we have right now, 165.79 down to 70. That's a nice area, and I would love to see price get back there, but it may not. So just keep that level ahead of there in a little bit of a word of caution, right? 165.86 or so could potentially be the bottom of the range. Overall, though, nice bear channel working its way down, arguably even getting tighter, maybe a small little wedge beginning to form here. And yeah, we're still cycling off the highs. We're looking for continuation to the downside. We still have a little bit of room to go to that 165.86 down to 79. So still looking on the sell side, possibly a trap on the highs to get that sell move going. On gold, man, we had a really nice bullish market when we started off the day, but it just gave up on itself. Nice bullish continuation higher off of the morning session. They found a little bit of a bottom down here and continued to grind higher. Now that grind higher seems to have hit a brick wall up here. 1258.5 up to 59.3 just put a ceiling on the market, and it did not let it through. It banged its head against it several times over and over and over and over again until we broke down. The buyers gave up. And when the buyers gave up, well, that turns into a lot of sell orders, and that was a flooded move to the downside. Very fast, very quick, and relatively, well, painful if you were on the wrong side of it, or painless if you were on the right side of it. Very fast. Now, that down move, really all that accomplished is to put us in a range once again. We have a new low into a new high, a new low with a double press, into a new high with arguably several presses, but I'm sure you could wind that up into two presses, just a little broad on the second one, into another new low, and now we're seeing a huge amount of inventory getting put in down here. So what we have is the potential for a second press. This is a very strong move down, very likely that sellers are going to be trying to sell everything to get that second move down, and it appears as though they are. Big seller objective is going to be at 46.3, and that's where I would anticipate seeing a lot of sellers who may still be in this. They're going to be looking to exit exit around that area for their profit targets. Now, we are in an area of support, and if this is a range, this level should become somewhat interesting. Knowing that we're probably going to get a breakdown of the lows into that objective, what I would rather see is a breakdown into the objective, get it tested or at least near tested, then the market come back up and hold inside pullbacks like this. That would allow us to buy into the dip and shove the market back up to at least around where we see the sellers regaining confidence here, around that 52.5 area. So at the moment, I'm not really looking to do a whole lot. Maybe sell, but it's going to be slightly aggressive because we are in an area of support. I would rather see them break down, catch the breakout move maybe, otherwise wait for them to pop back in, catch an inside pullback, and ride the market right back up again. Over on the bonds, relatively interesting movement on the bonds. I know this may come as a surprise to you, but it's range bound. Now, all kidding aside, the bonds have been range bound since forever, seemingly. But if we zoom out, there is a nice trend working here. We have a nice bull trend working its way up, but we are seeing a decent amount of weakness. Notice this miss on the highs. That tells us that the buyers lost grip, and they may be running out of steam with this bull trend being as extended as it is. They may not want to buy high anymore, and that's causing a little bit of weakness. And that weakness was quickly picked up by the sellers, slamming the market right back down into now a new low. Now, with this miss on the highs, generally speaking, when you have a miss on one side, it's usually going to expand the other. We missed the highs, we didn't break out to a new high, so we're likely going to expand the lows, and this is a very strong move down. So because it's such a strong move down, there are going to be sellers that missed that initial drive, and they're going to look to sell into a retracement. So I would be looking for a secondary push on this. It might come right now, it might come in a little while, but looking for a retrace into resistance at around that 151.10 area, and then look to turn it back around for an attempted new low. Once they get that new low, the same plan goes into effect just like we were talking about on gold. Wait for them to bounce up, catch an inside pullback, and then look to ride it right back up towards the highs. Over on crude oil, what a reversal at the end of the day. Holy smokes. We had a beautiful downtrend pretty much all morning, but unfortunately for us US session traders, most of it happened before the US Open. Once the US Open started kicking off in towards that 9 o'clock area, got pretty choppy and kind of gross. So if you were awake early enough, you caught some pretty nice movement here to the downside. Once we kicked off the morning session, though, got a little bit choppy, grindy, kind of gross, and what do we see here? A miss on the lows. That is a higher low into a massive reversal to the upside, and just like we were talking about before on the bonds, you miss one side, you're probably going to go through the other. Now, this one became a little bit extended, right? This is a pretty big move up. We do have large support at 53.61 as well as minor support, but if we look back, it could be considered fairly heavy given the amount that we've broken out above it. 53.89 is also support. We have big upside targets for buyers. That's going to be at 54.16, back above that 54 level to try to push the market up. And interestingly enough, notice what happened. Remember, last day of the month, they're going to fight over, is this month going to be positive or negative? This is last month's close, this is last month's open, and they ended up getting a beautiful bull bounce off of the close, and it looks like fund managers and hedge funds want this month to be bullish. So that is what we have. We're going to be likely closing, depending on the API, of course. I doubt that's going to make much of a difference. We should be closing bullish on the month, and yeah, we'll kind of use that for some information. But pretty interesting to see them defend that close so aggressively. They must really want February to be a bullish month. Either way, major upside objectives at 54.16, minor support at 53.89 and 61 if they can get a pullback. Looking to buy, and selling is pretty much out of the question right now on crude oil. Over on the Nasdaq, relatively range bound to start the day off, but it did get a nice breakout. Started off the range, we broke out underneath it, got a double press. The buyers tried to get it back up in, but quickly failed once the stock exchange opened up. Got a little bit of news, and they just did not give up. The sellers really hammered that market lower. So with that drive down, that left us with a support area right here, now resistance. That leaves us at 53.3375 up to 36.75. And given that this reversal down here was so aggressive and just such a massive failure from the sellers to continue, we need to keep an eye on that as well. So 53.22 down to 53.17 is that potential area of support, and that is forming a little bit of a wedge, maybe even cycling off of the highs of it. So looking to sell with this little bit of a mid-peak trap that we have going on here, I would almost like to see them come back and not make a new high and turn back down, and that could kick off a nice move back towards this area of support below. A little head fake above that wouldn't hurt my feelings. It might give you some better pricing, but overall, definitely still looking on the sell side for one more attempt at the lows here on the Nasdaq. And then finally on the S&P, same situation, range bound to start the day off, and we catch a nice breakdown that is forming a wedge, and inside this wedge we have a little bit of a tighter move. That wasn't such a large breakout on the S&P compared to the Nasdaq, but we still have that area of support turned into resistance, 63.5 up to 64.5, and that massive failure on the lows, that gives us support at 59.25 down to 57.5, and looking for the market to potentially cycle inside of here. We are also getting a wedge, which may come into play, but again, we're probably transitioning into a range. I would rather look for a trap, and this is the kind of trap I would want to see on the Nasdaq if it is. Just pops its head above and then gets slapped right back down again. So the sellers definitely have the emphasis looking to sell around that 63.5 to 64.5 to attempt to drive that lower back down to the 59s. Now, in terms of the news for tomorrow, again, like I said, we do have President Trump speaking later tonight at 2100 Eastern Time. As far as tomorrow's news, we do have a decent amount of stuff coming out. We have the German manufacturing PMI coming out at 3:55 Eastern at 4 o'clock Eastern, the German unemployment changes, and then we start going into the UK at session at 4:30 manufacturing PMI. Those are all early session if you're trading tomorrow morning. Once we get into the US session, 10 o'clock has a block of news for both Canadian markets as well as the US markets, and then we go into 10:30. So 10 o'clock, we have the ISM manufacturing PMI, and out of Canada, the Bank of Canada interest rate decision. And then we go into 10:30 with the crude oil inventories. So all kinds of fun stuff set for tomorrow. And again, don't forget, we've got that big news, well, not really news, but just big speaker, i.e. the president, is speaking later tonight. So play it safe tonight. And like we always say, make a plan, trade that plan, follow your rules, and you will be A-okay. Until next time, have a good trading night, and we will see you all tomorrow.